This is the summary of my options account selling Tesla put options. The total premium I've collected is $27,452 US. In this video, I'm going to show you how I did it, what are the risks involved, and most importantly, how you can do it. So let's jump right in. In this table, you can see my execution dates, execution time, description of the put options I've sold, the miscellaneous fees and commissions I need to pay, and the premium I collected for selling these put options. I normally sell put options 30 to 45 days out, as I find this duration gives me the best risk to reward ratio between the premium I can collect and the duration of my exposed risk. This video will be the first of a two-part series, as I want to make sure I am going at a suitable pace that you can grasp the principles, and I do not want to leave out important information just to fit all content into one video. In this first part, I will go through how this strategy works and my reasonings behind my trades. In the second video, I will share the advantages and disadvantages of this strategy, how I wrote my trades and increased the premiums I have collected to $30,000 US, and common pitfalls that you need to avoid when dealing with options. Now with the stage set, let's start rolling. The strategy is to sell cash secured put options on stocks you are willing to hold. It may sound complicated, but actually it is not quite. Put option is a financial instrument which gives the buyer the right to sell an asset at a specific price, which we also call it the strike price, by a specific date to the seller of the put. And cash secured means I have enough cash to buy the stocks if the stock price drops below the strike price and the buyer chooses to assign the stocks to me. Using one of the put options that I've sold as an example, this put option will expire on 30th July 2021, and the strike price is $627.50. That means if the stock price drops below the strike price of $627.50, and if the buyer of the option chooses to assign the stocks to me, I will need to pay $62,750 to buy the stocks. This is so because each option contract represents 100 shares, and I will need to have this amount of cash ready just in case I am assigned. If I am not assigned, the cycle repeats and I will sell another put option and collect the premium. If you find needing $60,000 to $70,000 to secure the put option is too much, you can consider ETFs or stocks with lower share prices. For example, the S&P 500 ETF SPY needing around $43,000, or Apple needing around $14,000. But do note to only sell put options on ETFs or stocks you are willing to hold, and not because they are cheaper. This is an important consideration to bear in mind. Now you might be thinking, why did I choose to sell Tesla options? There are 4 reasons in me doing so. First, there is still substantial growth potential for this company. In the area of automotive, Tesla is the leading electric vehicle manufacturing company in the world currently. As you can see from this table, that Tesla took the top position in the global EV market share, with Volkswagen coming in at a distant second, with 1/3 of what Tesla achieved. To capitalize on its head start, Tesla is building 2 new vehicle assembly operations, one in Berlin that could eventually assemble as many as 500,000 cars annually, and the other in Texas that will make the brand's first pickup. Both are expected to start production later this year, joining its existing vehicle assembly facilities in Fremont, California and Shanghai. Tesla has also unveiled its new battery cell, known as the 4680 battery. And this new cell offers 6 times the power of Tesla's previous cells and 5 times the energy capacity. In addition to the automotive business, Tesla has also developments in solar energy generation systems, battery energy storage products, and potential future services such as automated full self-driving, insurance, and ride-sharing robo-taxis. It is possible that Tesla is poised for future growth with its current trajectory and may one day join the group of trillion-dollar market cap companies. By the way, if you are enjoying this video so far, do remember to hit the like button and subscribe. Moving on, the second reason is that Tesla had been trading sideways since March 2021 with support at around $540 and resistance at around $694 as seen from this chart. This makes selling put options easier as the stock price has the tendency to be bounded within this price range and I can sell near the money option with greater confidence. Of course, there are no permanent support and resistance, and if the stock price goes above the resistance, all my options will expire worthless and my capital will be refreshed for another cycle of selling puts. However, if the stock price increases too much, it would mean more cash needed to secure the put position and makes the trade less attractive. If the stock price breaks below the support, I will be incurring a loss as I will be assigned the stocks with a much higher price than the current market price. And this brings me to the third reason. I am bullish on Tesla and is comfortable holding the stocks of this company long term. It is important to understand that time in the market is more important than timing the market. And given the growth prospect of Tesla, I think there is a high probability that Tesla will go above $700. It is just a matter of time. This supports my confidence in selling Tesla put options with strike prices in the range of $600. However, do note that these are only my own personal hypotheses and please take it with a pinch of salt and always invest within your own capacity using only cash that you can afford to lose and without affecting your daily life. Otherwise, you are likely over-invested and it will be good to scale back. The last reason is the high implied volatility for Tesla options. It is a topic on its own to cover all the factors affecting the premium of options, but in general, the higher the implied volatility, the higher the premium. For example, you can see from the monthly chart of Tesla that the price percentage change can be as high as 70% within a month. And comparing to SPY, the largest price percentage movement that occurred in March 2020 due to the pandemic was only around 18%. Consequently, you can expect the implied volatility for SPY to be much lower than Tesla, and so are the options premiums. So that's all for today's video. In the next video, I will share the advantages and disadvantages of this strategy, how I wrote my trades to increase the premiums I've collected to $30,000 and common pitfalls that you need to avoid when dealing with options. Please like, share and subscribe so you won't miss out on my next video. Thank you and goodbye.